Welcome back in YouTube. So in this video, we're going to talk about Workday as the stock has tumbled down roughly 10% on the day. The bell's going to ring in about 5 to 10 minutes. I also want to touch on Bristol-Myers Squibb really quick as well. So if you're new to the channel, welcome in. My name's Colton. We do fundamental analysis on this channel. So if you like this type of material, make sure you like and subscribe, and let's get into what is going on with Workday. Now, the first thing I want to point out is the quality of companies that partner with Workday. Workday really has a hold on Fortune 500 companies. Basically 60% of the Fortune 500 companies work with Workday, and you can see just some of the list of the quality companies that do business with Workday. Workday provides enterprise cloud applications for Fortune 500 companies for finance, HR, planning, spend management, and analytics. Has over 10,500 customers, and as we saw, very, very high quality type customers. When we take a snapshot of financial performance, we get a nice picture here that revenue has been steadily inclining, and then look at this, we have a nice pop in earnings as well. So earnings is starting to follow that revenue growth. We have 15 buys, 8 strong buys, 6 holds, and 1 sell. So overall, I would say it's a pretty bullish thesis on the company. The other thing I want to point out is they are getting margin expansion. So what caused this big sell-off? To put it in a nutshell, their growth rates are most likely going to slow here because of what's taking place in the labor markets. The Federal Reserve is trying to slow down this hot labor market, but that's going to impact a company like Workday, who makes money as people jump on that payroll wheel. So if you think the labor markets are going to weaken here, Workday might be one that you kind of want to stay away from until we see some stabilization of what's going on with the economic data. As we all know, the economics are softening here. This could be an impact to a company like Workday. We're seeing nice top line revenue growth of 18%, subscription growth of 18.8%, and a huge backlog that's taking place here. And with sentiment around the stock, we have price targets as high as 350, as low as 190. On stock analysis, they have them growing pretty strong here, still maintaining double-digit revenue growth and very strong EPS growth following, which makes sense as margins grow. On Yahoo, they have them growing over 20% over the next 5 years. So I'm going to start plugging in my models here. I'm going to have them doing 14% revenue growth, 12% revenue growth, and 8% revenue growth. So the nice thing is they're giving us full guidance here of 8.35 billion to 8.38 billion. And I'm trying to line up the numbers as best as I can. So I have them at 8.3. So I have them closer to that 8.38 billion, but next year I have them at 9.5. 10.8, and you can steadily see the growth here from the 14 to 12% revenue growth. We have a current PE ratio sitting around 45 and a forward PE sitting in the high 30s. Now the art of investing is figuring out what kind of multiple we want to put on this stock. And I basically need to be buying the stock around 150. Now, of course, this is a stock that I would probably reach at 165, 170 on and start building out there. This is not a perfect science, ladies and gentlemen. This is just giving me an idea where value could be for the company by using my growth rates, what I think the company is going to do as far as dilution, what I think their margins are going to be. And so there is a lot of speculation with running these models, but this is kind of how I do it. I do it very conservatively, and I build some safety within my analysis. So we got some questions on Bristol-Myers Squibb. Where do I think Bristol-Myers Squibb should be trading? So with these companies, specifically biotech pharma companies, you have to be really alert and understand what's in their pipeline and what they're guiding for, because as we saw with companies like Pfizer, they can turn pretty quick, and they're very, very volatile. They're very similar to cyclical businesses where they build out their pipeline and they have a tremendous amount of patented items out there. But once those come off a patent and once they start losing that pipeline, we can see that the stock price kind of flutters. And so what are we seeing? Well, top line revenue has been pretty flat over the last few years, and there's nothing really exciting to generate future revenue growth that we know of with Bristol-Myers Squibb. So the stock price is getting absolutely hammered for this. We're seeing them try to strengthen their long-term portfolio as they've been making some acquisitions here. So here's where the big problem happened with Bristol-Myers Squibb. They originally guided for $7.10 to $7.40, but after all the acquisitions, this is going to have to be, the EPS was revised to 40 cents to 70 cents. So obviously this scared the heck out of investors. But this is something you have to really pay attention to when you're invested in these type of biopharmaceutical companies. The acquisition cost, what's in their pipeline, can the pipeline offset acquisition costs? This one's really hard to start plugging in here, ladies and gentlemen, because it looks like 2024 is going to be a complete wash here. They're making acquisitions. They're basically getting single-digit growth, but within that growth, they're spending tremendously on these acquisitions, so it kind of offsets everything. We don't know what's going to come from those acquisitions quite yet. So a lot of questions here. So how would I value this stock? I'd value it based on currently what they're doing, and I would say that To err on caution, I would say that I would keep it flat to almost negative. So now you have to start asking yourself, over the next 12 to 18 months, the recent acquisitions, can they start getting things in their pipeline to reignite top line revenue growth and get the fundamentals back on track? Because right now, it's really, really out of whack, and you're kind of just speculating at this point in time. There's no real way to project out what they're going to do. So I'm just going to err on caution and say that they're going to do right around 41 billion, and they're going to grow right around 4% pretty consistently here. I'm also putting in a 10% rate of return, and this is a company paying a 5% dividend. So compounded rate of returns can be closer to 15 and 16% for this company, and much higher if they do get something in their pipeline. With that being said, I think under $41 makes sense. So right now, it's definitely teetering on a buy territory in my opinion. With this downtrend in this chart, I would actually try to buy in the 30s if possible, and just be expecting a bumpy ride for the next 3 to 4 years, but having some tremendous upside, especially if they can keep the dividend. If they can keep that dividend intact, that would be a heck of a rate of return 10 plus years out if things start coming to fruition in their pipeline. When we look at forecasts, we have as low as $43 and as high as $84. Well, currently the stock's at 41, so that's showing that there could be some upside here. But I would say between here and to the mid 30s is definitely a buy. That was my dive into Workday and Bristol Myers Squibb. Hopefully you guys enjoyed. Let me know what your thoughts are on both of these stocks. Leave a comment down below, and we will see you in the next one.